Taxation, GST and Remedial Matters Bill, second reading.
Mr Speaker.
The Honourable Peter Dunn.
Mr Speaker, I move that the Taxation, GST and Remedial Matters Bill be now read a second time. And may I say, sir, by way of an aside at the beginning, that a debate on arcane matters relating to aspects of the GST system may seem singularly out of place at a time when the nation will be grieving along with the families of the West Coast at today's tragic developments. And I just want to say that I'm sure that everyone's heart goes out to those people in this hour of their tragedy. Against that background, sir, let me make some comments about the Taxation, GST and Remedial Matters Bill that we are debating this afternoon. This bill aims to maintain the integrity and the fairness of the GST system by amending the GST Act 1985 to strengthen the GST rules. And what it does is propose significant changes to the GST system which seek to remove tax avoidance opportunities and reduce business compliance costs while at the same time clarifying taxpayers' obligations. Specifically what that means, sir, is that the bill introduces new rules to prevent what have been called Phoenix schemes, a fraud arrangement whose purpose is to create a GST refund when no corresponding GST payment has been made by the supplier of the transaction. The schemes of this nature exploit asymmetric aspects of the GST system between the payment of tax and the entitlement to input tax refunds. And what the bill does is address this by requiring that GST-registered vendors charge the GST at a zero rate on most transactions involving land, or in which land is a component, if the purchaser is also GST registered. So the capacity for the one to claim the refund is reduced by the introduction of this provision. This was the subject of consultation last year and the issue of an issues paper from Inland Revenue and submissions upon it. Mr Speaker, in addition to this particular measure, the bill also aims to reduce compliance costs for businesses by clarifying certain parts of the GST rules to make it easier for taxpayers to understand their GST obligations. The areas that are being clarified include the current technically complex change in use rules that apply when assets are used for both taxable and non-taxable purposes. The bill proposes to replace these rules with rules that would require businesses to apportion the input tax deductions according to the actual use of the goods and services in question. And that would simplify the requirements for many GST-registered businesses. The GST boundary between residential accommodation, which is GST exempt, and commercial accommodation, which is not, is also being clarified, as are the GST rules relating to transactions involving nominees, where the purchaser has nominated another person to receive the goods and to settle the transaction. Mr Speaker, in its consideration of the bill, the Finance and Expenditure Committee has recommended a number of changes of a technical nature. The Select Committee's recommendations include expanding the definition of the term land to include shares in flat-owning or office-owning companies and removing short-term leases from the definition. The changes to allow the supplier to issue debit and credit notes to correct the GST treatment of the supply when the supply was incorrectly zero-rated or standard-rated. Ensuring that the supplier is not responsible for tax if the supplier has chosen a tax treatment based on incorrect information provided by the recipient, and suppliers of financial services having the option of using an alternative method of apportioning input tax for any non-taxable use when that method has been agreed with the Commissioner of Inland Revenue. Mr Speaker, the committee has also recommended changing the application date of the proposed amendment clarifying the scope of the tax exemption for fringe benefits provided on the premises of the employer. Originally, this amendment was proposed to apply retrospectively. The Select Committee has recommended that it apply from the date of the introduction of this bill, which would clarify the effect of the provision going forward, while also allowing any existing disputes to run their course. And Mr Speaker, in addition, this bill proposes minor, largely remedial changes in a number of other areas. These include allowing portfolio investment entities a deduction for credit impairment provisions, clarifying the tax treatment of superannuation funds under the National Provident Fund, clarifying the way that emissions units allocated by the government under the emissions trading scheme are to be recognised for income tax purposes, and clarifying the fringe benefit on premises exemptions. Mr. Speaker, further to those changes, I want to advise the House that I will be releasing a supplementary order paper in due course to give effect to measures that were announced in Budget 2010. Chief amongst these measures are proposals to clarify the rules for depreciation of non-residential building fit-outs and the grandparenting of depreciation loading, improving the fairness of access to social assistance programs, and preventing loss-attributing qualifying companies from passing on losses to their shareholders, and introducing new flow-through income tax rules for closely held companies who chose to use them. Mr. Speaker, all of these matters were announced in the budget. They've been the subject of consultation subsequently, and they need to be legislated for in time for the provisions to take effect from the 1st of April next year. Can I, in closing, sir, thank the members of the committee for their deliberations and for the constructive and cooperative way in which they progressed this bill. I now have great pleasure in commending it to the House.
The question is that the motion be agreed to.
Speaker.
The Honourable David Cunliffe.
Mr. Speaker, I rise to take a call in support of this bill on behalf of the Labour opposition, to commend the work of the Select Committee and to note a number of associated matters. Mr. Speaker, firstly on the substance of the bill, the Labour opposition will be supporting this bill through all three readings, and Labour has participated fully in the scrutiny of the bill at the Select Committee stage. As the Minister has said, the Select Committee has made a number of amendments following its usual policy of examination of tax matters, employing an independent tax advisor to assist it in its discussion with the Inland Revenue Department of technical aspects of the bill. Mr. Speaker, this is not, we should say for the clarification of those listening or viewing, a major policy piece of legislation. This is a set of technical amendments to improve the operation of the GST and other tax matters, to close down several potential loopholes, most notably in respect of Phoenix schemes and other issues surrounding land transaction, and thereby to protect the tax base. Sir, I will therefore take my remarks in two sections. First section in regard to those technical matters, and secondly some policy issues that arise out of them. Sir, in respect of technical matters, I would note that the bill does zero rate certain land transactions. This is in an effort to prevent Phoenix-type fraud schemes where GST is refunded to a registered purchaser with no corresponding GST payment made by the vendor. Zero rating GST prevents that shadow transaction from taking place, and thereby, although it may not sound like it, actually prevents an avoidance opportunity from materialising. So although it's a zero rating, it's actually zero rating the loophole in the process. Mr. Speaker, the Select Committee has recommended a number of technical amendments to aspects of the bill in respect of the zero rating of land transactions, and it was the area of the bill that the Select Committee spent the most of its time and focus on, and I'm sure that the Chairman of the Committee, Craig Foss MP, will detail that consideration further shortly. There have been amendments to the definitions of dwellings and commercial buildings, which has gone into some detail to consider definitions around rest homes, student accommodation and the like. The bill also deals with apportionment rules, seeking to replace existing change in use adjustments to deal with goods and services partly used for taxable purposes and partly for exempt purposes, with a new approach that would apportion the related input tax deductions. And that's important because they will, it is hoped, be easier to use and understand, and they will avoid certain unintended consequences and uses, such as, for example, in respect of joint bank accounts, where one person could draw on the account without the signature of the other. These matters are of a technical nature,